It started with social media posts that a chief scientist told a meeting that China's COVID policy would change. And then Bloomberg reported that Beijing was working on plans to stop penalising airlines that bring COVID cases into China. Today, that was all denied by the National Health Commission. But it just goes to show how febrile and eager for good news the markets are these days, with big rises in the prices of iron ore, oil, copper and gold, on the strength of which Australian mining stocks impersonated rockets today and offset falls by the banks to push the All Ordinaries Index 0.6% higher. The reason banks fell was that while reporting a 1% decline in profit, Westpac CEO Peter King abandoned its $8 billion cost target, saying that a lot of our costs are people, which seems to have snuck up on them. Those rumours about China easing its zero COVID policy also pushed Asian share markets higher today after a solid bounce in New York on Friday. And speaking of China and zero COVID, I've often displayed this chart of Australian retail sales showing how far above the long-term trend they are. Well, here's the same thing for China, 20% below the long-term trend. And for today's final graph, the blue line on this chart is a composite of the share prices of Meta, Alphabet, Netflix, Apple, Microsoft and Amazon, the big 6 American technology stocks. The red line is the rest of the US share market, and the yellow line is the rest of the world. Self-explanatory, isn't it? Finally, the Australian dollar is steady tonight at around 64.5 US cents. And that's finance. Thanks for watching. You can check out more finance news by clicking there, and don't forget to click subscribe down there to get all the latest updates from ABC News.